Artificial intelligence has been a big catalyst for the big tech names recently. Microsoft up 24% since it announced new versions of Bing and Edge powered by ChatGPT. Amazon is up 20% since announcing its Bedrock program. And Google has climbed more than 16% in the days following its I.O. event. But our next guest says it's the cloud names that are going to come out on top in the AI arms race. He's got a few key companies he is watching. With us now is Tim Horan, Cloud and Communications Analyst at Oppenheimer. Tim, I'm a little surprised by this in a way because these hyperscaler cloud names have such high valuations. One might argue AI's success is already baked in. So why them and not application players to win in AI?
Great question. Well, first, we don't really know who the application winners are going to be. We think most SaaS or most software will be embedded with intelligence at this point, but the business models are not really clear. But we do know that the ARM suppliers are usually winners in these processes. That was kind of the case back in the internet 20 years ago and has been over that time period. And the cloud providers in general, if you have the best infrastructure, people are going to generally ride on top of that infrastructure. And the big three hyperscalers at this point really have the scale to train these AI models and to host these applications.
What about some of the kind of semi-infrastructure, maybe kind of DevOps type players like your ServiceNows, your MongoDBs, even your Snowflakes that are dealing in data and trying to create a platform effect for themselves, even though they're not hyperscalers? Are those too risky?
It's all going to depend on execution at this point, and these companies are a layer above the cloud, and that's going to be needed. We're going to basically need to label the data. You're going to need to curate the data. There's a whole host of suppliers and a whole new food chain that's going to be required out there. But there's massive opportunity for most companies that have been involved in the cloud for a long period of time, and the cloud may evolve from a technology perspective and probably will to a much more decentralized look and edge-based look over time. But right now, we think we're going to see an acceleration in cloud growth in 24, 25, almost entirely driven by AI at this point. And that whole food chain of suppliers should benefit.
Now, you've pointed out DigitalOcean as being at risk, and I wonder if you mean that longer term or if you just mean that it's range bound for a while, because this is a company that focuses on cloud-type services for smaller businesses. They're being run by a former CFO who's really trying to keep it as efficient as possible. Are you saying that smaller companies that cater to small business are going to get kind of blown out in the AI-driven era, or just that it's going to take them longer to establish velocity?
Great question. They don't really have much, DigitalOcean in particular, does not have a lot of cloud AI-based capabilities at this point. They're still studying it, so they're likely going to have to invest in it. We think most new startups are going to be AI-focused over the next few years. Probably 80 to 90% will have some AI capability with them, and DigitalOcean really is focused on startups. But for DigitalOcean in the short term and for a few of our other emerging cloud names, they are much more highly correlated with economic growth. And the economy is clearly, slowing here still a little bit more. They've been, guiding down a little bit. They've not seen much in the way of organic growth the last few quarters, and we think that will continue.
What ends up happening to, say, not only DigitalOcean, but say a GoDaddy that even will sell through, say Microsoft 365, right? Does that type of relationship where they're a reseller to small and medium business, mostly small business, change in the AI era, or do they end up becoming a conduit through which some of these hyperscalers reach the smaller businesses that aren't necessarily going to be the focus of their larger sales forces?
It's a great question. If you look at a lot of I'll use these business models at a high level, SaaS-based business models, they only really paid about 10% of revenues to the cloud providers historically. Going forward, it's going to be more like 20%. The cloud providers are going to be able to extract a much higher of a tax at this point, and it is much more expensive. It remains to be seen, though, if these companies can pass that through or not.
All right. Tim Horan from Oppenheimer, thank you.
Thank you.